Now, the International Monetary Fund has trimmed its 2023 global growth outlook just slightly, and that's as higher interest rates cool activity globally. Now, the fund also warns that a severe flare-up of financial system turmoil could slash output to near recessionary levels. The IMF is also projecting a growth slowdown from 3.4% last year to 2.8% in 2023. That's before rising to 3% in 2024. Now, IMF chief economist Pierre-Olivier Gourinchas told a press briefing today that there might be a need for more monetary tightening, and that's if inflation remains stickier than expected.
Once again, risks are heavily tilted to the downside. They have risen with the recent financial turmoil. Most prominently, recent banking system turbulence could result in a sharper and more persistent tightening of global financial conditions. The simultaneous rate hikes across countries could have more contractionary effects than expected, especially as debt levels are at historical highs. There might be a need for more monetary tightening if inflation remains stickier than expected. These risks and more could all materialize at a time when policymakers face much more limited policy space to offset negative shocks, especially in low-income countries.
Now, of course, the IMF World Bank spring meetings entered their second day today. And let's get an update on this year's discussions. John Terrett now joins us in New York. John, always good to have you with us on the show. Now, what the IMF pretty much said in this latest World Economic Outlook report is that the fog around the World Economic Outlook has thickened. And of course, we know what investors really want to see at this year's meeting is some clues as to the outlook going forward. So what are the hottest issues for most that are on the table at this year's meetings?
Well, I tell you, Uche, it's all pretty grim. I mean, really, we haven't seen reports like this for decades. It's very, very bad indeed. And my way of characterizing it really is that all the talk at the spring meeting this time round, everything is dominated by two words. One of them would be slowdown, and the other one would be uncertainty. And in the intro to today's Global Economic Outlook that was published several hours ago now, the organization actually talks about the global economy being in a perilous place. So that just goes to show you it's not very good at all. Now, here are the numbers as I have them. So my understanding is that the IMF is predicting growth of around 3% for the next 5 years. Actually, it's 2.8% global growth this year, 2023, and then 3% after that. Now, the United Kingdom, interestingly, is the hardest hit of all, it seems to me. It's even worse off in the course of the prediction on paper here than Russia is, with all those sanctions against Russia. And of course, this is because of inflation and interest rates and COVID. We're still at the back end of that, and Ukraine as well. And the UK is very, very subject to a very high cost for fuel, much of it, of course, imported from Russia. Here in the US, the prediction is for 1.6% growth in 2023, 1.1% in 2024. Now, you know, that's really not very good, really, quite frankly. It's not much. However, it's better than a lot of places around the world. In fact, it's better than many places around the world. And there are some bright spots. And believe it or not, the USA is one of them, despite that low growth forecast. And the thinking is that the US is not really dependent on Russian fuel in any way. It's certainly nothing like the European countries are. And then over and above that, the bright spots would be China and India, both recovering China and recovering India after COVID. They seem to be doing very, very well, and the forecast for these economies is good to the extent that they will be responsible for about half of all global GDP in the forecast period. However, the IMF does talk about turbulence as well. This is another terrible word that we haven't really heard before. And turbulence means the banking crisis. So that's Credit Suisse taken over by UBS. Here in America, of course, it's Silicon Valley Bank and Signature Bank, and still very real worries about banking here and bank contagion spreading around the world. Uche?
And as you said, the outlook is pretty grim. So for most here in Africa, what is critical at this year's meetings is getting some clarity into the delays around that debt restructuring process, which is, of course, is under the G20's common framework. How is this year's meeting addressing that whole issue of debt?
Well, wouldn't you like to know is the answer, and I can tell you that analysts and investors and governments are asking the very, very same question. This is one of the things that's going to be discussed a lot here in the remaining of the week that goes on. It goes on till Saturday, by the way, in Washington, D.C. It is a G20 plan, as you say, relatively newish. The idea is to offer a pathway for creditors to renegotiate the debt of struggling economic countries who they have loaned to. Now, China is a major lender. It may interest you to know that China lends as much, and in some cases more, than the IMF and the World Bank together these days, both short and long-term loans, but they're able to offer a much lower interest rate, which I think is pretty staggering, really. Now, China has promised to lend to lots of countries, but I think it's fair reporting to say has been a little bit hesitant, a little bit reticent, really, when it comes to accepting punishment when those loans go bad. And a good example would be Zambia in the south of the continent. Now, Zambia, of course, defaulted. And Kristalina Georgieva, who is the managing director of the IMF, has called on China many times to step up and take the loss with Zambia and to renegotiate the loan. And to that end, Janet Yellen, the Treasury Secretary for the United States, who is in Washington, D.C., of course, has called in the last 24 hours for the speeding up of the renegotiating of the loans for Zambia in the south of the country and Ghana, continent, and Ghana in the west of the continent. And I tell you, Uche, there is a lot of money coming Africa's way in the future, a lot of it. You saw the US giving Africa $55 billion at the turn of the year over the next 3 years. It's all about trying to best China's Belt and Road efforts. And so, you know, a lot of these countries are going to be pouring a lot of money into the continent, mainly because of the resources that you have there.
Now, it is interesting you say that, because IMF Managing Director Georgieva, she actually said something interesting today, and she actually warned that unlike past meetings where we see the worrying global financial outlook encouraging greater cooperation, this year fragmentation, she says, is the order of the day. So how are we seeing that impact those negotiations?
Yes. Well, it is the order of the day, and it's also a word, again, this is the third one, or maybe the fourth one, that we haven't really heard in connection with the spring meetings before. Fragmentation means protectionism, basically, and a rising fear that countries around the world are going to protect their regions or protect their groupings or protect their individual economies. And there are, of course, dangers in that. Now, in other words, another way of thinking of it is out with the old guard, the sort of what you might call the Second World War, post-Second World War era that we've been living through all these years, and in with a new world order that might, for example, be based around BRICS, which, as you know, is Brazil and Russia and India and China and South Africa. Now, there was another report out today, which is called the Global Financial Stability Report, and it concentrates on this idea of fragmentation, and it's something that is going to be discussed a great deal between now and Saturday. And one thing I will tell you is there's a worry in Washington now that one day China will pull out of the IMF and the World Bank, and that will destabilize the whole system. Now, some people say it needs destabilizing anyway, but that's a whole other argument for another day. My point is that China right now has a lot of power and influence within the World Bank and the IMF. And indeed, China has sent a delegation this year, which is being very closely paid attention to. And that's the first time they've actually come to Washington in the last 3 years, mainly because of COVID, of course, but it's good to see them back.
And now that they're back, is it likely we'll see a meeting or sort of tete-a-tete between top US and Chinese officials this year?
Yes, a little tete-a-tete, a little soupçon of discussion, maybe. Well, you know, when I first knew you were going to ask me that question, I was thinking of saying, no way, Jose, this ain't going to happen. There's too much animosity at the moment between Beijing and Washington, D.C., and there really is. And I tell you, in Washington, D.C., the politicians there take any opportunity they can to knock China. and to do it really, really badly as well, verging sometimes, I think, on xenophobia, quite frankly. However, I rethought what I was going to say, because the answer is you never know. I mean, that's the whole point of having a spring meeting of these organizations. The same with the UN General Assembly, which we have in September in the city. We know that President Biden has said openly that he very much wants to meet again face-to-face with President Xi to try and bring the countries into line a little bit more. The Biden administration has said time and time again they want competition with China. They don't want any kind of conflict or combat. And of course, Janet Yellen, the Treasury Secretary, is there. So there's a chance that they could meet in the corridor, in the restaurant maybe, and possibly even have some kind of conversation, even if it's not televised, even if the rest of us don't really know about it. All things are on the table. Uche?
Well, we know, John, you're certainly watching that closely. Many thanks, as always, for those great insights. That is John Terrett joining us there in New York with the latest on those meetings.